From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli in khaki alongside Nadine Blaney.
Well, it had been so long, Juliette, since I've sat beside you for this 20 minutes or so that we wrap the day. I thought I would dress the same as you as well. But no, it's nice to be here. Nice to be back.
Absolutely. And for those watching or listening, I should say, on podcast, we are both in khaki or khaki. Not planned, but that's what happens sometimes. You do twin. Let's get more important things and look at the market, which is in the green, another form of that colour, but only just. And really, this was as we started to see CSL being sold off in the afternoon trade. Nadine worries here that it's not selling enough of its vaccines, particularly not a very big pickup in the US. We're going to talk to that with our guest, Martin Crabb from Shaw and Partners, a little later.
Yeah, we had a whole heap of earnings, didn't we, today? We spoke with a number of CEOs as well. And I thought it was really interesting in your interview with Ryan Stokes, who of course heads up SGH, as it is now known, that you had the opportunity to ask about tariffs because, of course, that continues to really dominate headlines right now.
Absolutely. And we heard this morning, look, is there going to be somewhat of a truce between Australia and the US with Anthony Albanese, our Prime Minister, and Donald Trump holding a phone conversation. Anthony Albanese saying it's going well, and it does look like Australia will be spared those 25% tariffs on steel and aluminium. And then Donald Trump saying they're very far away, they need a lot of aeroplanes, but they are, of course, in surplus, so potentially we could be spared. That should probably have a question mark there, but is there a truce? And then I just put a shot in the arm there as well on the back of that CSL, because I had a really great conversation with Henry Jennings from Marcus today, and I mentioned there the lack of pickup in the immunisation business, but another part of their business, the Vifor part in CSL, seems to be holding up quite
14 and a half month low though for shares in CSL. And that is as we see these falling US flu vaccination rates. And then gold, all that glitters. There are so many alliterations we could do when it comes to gold because it's as strong as 10 men, according to somebody who's sitting in the studio with us right now. But listen, just as a little public service announcement, we have done a lot of these CEO interviews and reporting season after the fact analysis. You can find that all on our website, ausbiz.com.au, if you're listening to this in podcast form.
All right, let's have a look at those gold players as we see gold eye $3,000. Newmont, which is one of Henry's picks, he discussed that as well in the interview, up 3%. Evolution, Regis, De Grey and Northern Star also having a good session.
That's a bumper session, it sure is. Not so though, as you mentioned, for CSL, down by 4.6%. Cochlear reports later in the week. We've got the news on Ramsay Health. We'll get you across in just a moment. And Ansell, so had a big day yesterday in the wake of its results, giving back some of that today, but the brokers weighing in as well, pretty positive.
And having a look at some of the industrial players as well on the back of SGH, which hit a record today. You've got Transurban, Computershare, Worley all looking good. Brambles down a third of 1%.
All right, so let's just get a little bit of detail because not only did we hear from a lot of those companies reporting, but we did get a quarterly from Macquarie. So profits in the 9 months to December were flat. Now it expects FY25 profit in the Commodities and Global Markets division to come through, as well as Macquarie Capital, but saying that it could be significantly lower because of those subdued conditions in commodities markets.
CSL there we mentioned, of course, sales impacted by significantly low immunisation rates, particularly in the US.
Ramsay, a bit of life in it yet, I suppose, hitting a 2-month high on a stronger outlook, expecting first half underlying profit to come in between 150 to 160 million, so that was a beat on consensus.
And we forgot to mention with SGH, it hiked its dividend by 30%, and of course those strong earnings mainly due to Boral. I also asked Ryan Stokes about Seven West Media because they have that 40% ownership. They saw a decline in revenue, but they're starting to see a turnaround, potentially a bottom in the advertising market, and that lifted Nine as well.
Nine was going gangbusters. And here we'll just roll you through a few of these other results. Breville Group, interim dividend of 18 cents per share. It's looking to China for growth. Region, another CEO who you had the pleasure of speaking to today, it's returned to first half profit and reaffirmed its guidance, but shares coming under pressure, down by 2.5%. And Car Group, so this is from yesterday, extending losses today, but Macquarie did hike its price target on the outlook, and Insitec Pivot lower production outlook. Macquarie has lowered its price target there as well.
All right, let's welcome our guest to the COB, Martin Crabb from Shaw and Partners. A lot to talk about, but I did want to start though with CSL because we were just talking about that.
Yep.
So weakness at Vifor and the vaccine business here.
Yeah, look, everyone was watching the CSL Behring business, which is their plasma collection, and they've been having problems with that business in terms of maintaining the margin. And that was the bright spark. So the first thing you read was the Behring margin was better than expected or in line with guidance. But then you look through it and everything else is horrible, right? So Seqirus and Vifor, as you mentioned, having problems there. So it seems like the problem area is not such a problem, but everything else is. So this stock has been derated, significantly over the past 18 months. It's, I think, the third biggest stock in the market still, and its PE's just come down from 35 to sort of 25, and might even, after today's move, be touching towards that 20 times earnings, which it hasn't traded on for a long time. This is a market darling. This is the one that everyone wanted to own. No one sold it because everyone had big CGT, gains that they didn't want to realise. And it's just one that's been it's been really disappointing. And even today was a good opportunity for them to show the market that actually turned things around at Behring. But as you mentioned, the other divisions are really, really disappointing. The vaccine stuff in the States is interesting. Has that got anything to do with RFK?
With RFK, well, that's what one of my other guests mentioned as well. And now that you're starting to see more and more of that conversation come through, does that hurt it even more?
It's probably unrelated, right? But I think, if you have a particularly nasty flu season, a lot of people run out and get the vaccine. So I'm sure there's some seasonality to that business, as well as just being, more and more people are going to get vaccinated every year. Certainly if you go and see a GP in Australia, they always tell you to get the vaccine. But whether or not that's just a seasonality thing, there's not a big flu season in the States, and so that business is cyclical. If that's the reason it's being sold off, it's probably a buying opportunity, right? Because it'll normalise.
Well, that was the question. Is it a buying opportunity, or has some of the magic, so to speak, been lost at CSL?
Yeah, look, I think they're still recovering back to pre-COVID levels. So if you think about the plasma business, basically you collect all of the plasma in the United States because it's one of the few countries in the world where you're allowed to sell your blood, so a lot of people do, particularly low-income people, and also people in the military. The US military are big blood donors. So you collect all this plasma in the US and then you take it overseas and you fraction it and you create drugs and stuff out of it, right? That's kind of the business. Now, blood collection plummeted during COVID. No one's going to go to a blood bank during an epidemic, right? So volumes haven't recovered. So they've got this big hole in the manufacturing pipeline where they just had a couple of years where they had no plasma being collected. We're still recovering back to that level. So I think there's a recovery story there. And just, I think, the longer term health thematic, more, people are living longer, more people are getting surgery, we need more plasma, and here's a company that's pretty much a monopoly on plasma collection globally. So we like it, it's in our portfolio, it's a core position in just about all of our portfolios, but it is one that's been very disappointing from a share price perspective.
All right, potential buy on the dip for some people.
I think so, yeah.
Have a look at Macquarie Group, it doesn't give actual figures, but it did sort of update on its businesses, and the commodities part is being hurt, but you're saying here that the mortgage bank flying.
Yeah, look, I don't think the Australian mortgage business at Macquarie is big enough to turn the dial on the group. It's a $75 billion company, but it's really interesting what's happening in the competitive dynamics of the Australian banking sector. So this is a business that wasn't in mortgages and deposits. Well, it probably wasn't deposits, but not mortgages, maybe 5 or 6 years ago in any material way. It's now got over 5% market share, and it's out competing the Big Four. So the Big Four have actually lost most of that share in the past 5 years to Macquarie Group. So since 2019, I think it's picked up about 3.5% market share. It's got a better net interest margin. It's got a lower cost of funds because it doesn't have the big infrastructure and branch network of some of the majors. And so it's really cherry picking the best deposits and the best lending. So this is a company that its success has to come at the expense of another. I'm bearish on the bank sector. I have been short and wrong on that for a while now, but I just think it's more grist to the mill about how difficult it is in the banking industry, how much pressure there is on margins and how much competition, and the fact that Macquarie grew by 5% in a quarter or 6% in a quarter, that's pretty dynamic. So as I said, is it enough to make you rush out and buy Macquarie shares tomorrow? I'm not sure. So there's the change in market share over the past 5 or 6 years. So there's been a material shift in the market, and that looks like continuing on the back of those numbers today.
CBA reports tomorrow. It's the only big bank that has its official half-yearly result coming out. So what are you listening out for?
Yeah, look, I think anything on margins and competition, and obviously people are very focused on capital management now. So most of the banks have got excess capital. CBA will print some pretty impressive numbers, both in terms of return on equity and also net profit. And the question is, do they do a buyback, or do they do other sort of capital management? Also, the first bank to report really since APRA's changed the rules on hybrids. So any indication there about what they're doing with their hybrids going forward, they probably won't talk about it, but they might get questions about it at their Q&A. So I just think there is $45 odd billion invested in hybrids in Australia. So it would be interesting to get some comments from them on that development as well.
Let's get to gold. As Nadine mentioned, strong as 10 men. So what does that mean? They're all $300 each.
It's I don't know. I thought that was quite a common colloquial phrase, strong as 10 men. But there's the share price. There's the gold price chart in USD. I think it was $29.45 when I left the office. So we're knocking at 3,000. Shaw and Partners famously came out with a $3,000 an ounce call, a year ago, maybe 18 months ago, and now everyone's there, right? So every banker last year up followed us, but it's been on a bit of a tear. But I don't know if you got the other chart I sent through, is just how fast this has happened this year. This year we're up over 12% this calendar year, and this is the last, I think, up to 10 years, maybe 8 or 9 years. So yes, gold can go higher. In some years it's been up 30-40%, but it's just been an absolute rocket ship. So most people would say, this is probably due for a bit of a pullback. I heard Sean Hickman on a little bit earlier saying, look, it's run pretty hard. Don't be too surprised if we have a bit of a breather. Gold equities have underperformed. So you might have a situation where gold stays at 3,000, the Aussie stays 62, 63, and the gold sector catches up, because the gold sector, producers have lagged. So I think you might see gold equities continue to run, but the gold price itself probably needs to have a bit of a breather, because it's been a rocket ship this year.
It
sure has.
I just have one quick more question. When we talk this time next week, I think your answer will be different to what it is today. And David Lane from Ordminet kind of pointed this out to me earlier as well. What's your view of reporting season so far? Because all the good stuff comes out early.
Yeah, well, that used to be the case, that you'd wait to the last day for all the cockroaches to come out, right? But I think it's difficult to draw too many themes, but definitely the domestic economy and the cyclical stocks have probably surprised to the upside. And I think Seven Group today is a good example. It's a conglomerate of businesses in construction and equipment and media, so it's really diversified, and they had some really good numbers. The other companies that have reported, even the ones that have disappointed, have had pretty good margin stories. So I think the domestic economy is probably performing a little bit better than people thought, and you may see that theme continue. Obviously, CommBank tomorrow and other industrials as we go. So far so good.
All right, Martin, thank you as always. Martin Crabb from Shaw and Partners.
That was a good summary of what's going on out there. Today, I don't know if you caught it or not, but we had an international special on the call. We were joined by Lachlan Hughes from Swell Asset Management and Mark Moreland from Value 3, and the stock of the day was NVIDIA.
It's in a very strong position due to its size and scale. And we just don't think it's a smart thing to bet against Jensen Huang. He's shown himself to be a great leader. And look, we know the demand that is there. We own Amazon and Microsoft, so we can see the spending that they're kind of engaging in at the moment. So we think that demand outlook looks very good. But in terms of the model efficiency, Andrew, like you mentioned with DeepSeek, I think the efficiency of the models will continue to improve over time. And I guess that does represent a slight headwind to GPU production and sales for NVIDIA.
So it's going to shoot the lights out again, but the problem is it's on a 50 trailing PE at the moment. Now 50 PE, as I'm sure most viewers would realise, is very low for a company that's doubling its earnings every year. But the reality is they can't keep doing it. And I'm not so concerned about the competitive threat in that we think they're at least 5 years ahead of the market. AMD's often put up as being the contender, but they have all sorts of problems. They have some good stuff as well, and they've got a new chip coming out, but they don't have the network. They don't have anything like the infrastructure that Jensen Huang's built at NVIDIA.
All right, let's get across some of the leaders and the laggards, as we are wont to do at this time of the day. Look at 9. I think that's pretty incredible when you consider all of the corporate governance issues, the fact they're still without a CEO, but really catching a tailwind in the wake of that 7 West Media results, which indications that the ad market is is starting to ignite. So up by 13%. SGH there, you heard our guest talking about that one. And then you've got the gold miners at the bottom there.
Absolutely. All right, to the downside, we mentioned CSL. There was also weakness in Liontown, down by almost 9%. Mineral Resources, Clarity Pharmaceuticals and IGO. So a lot of these mining players, of course, hit as we continue to weigh the uncertainty of the Trump tariffs as well.
Yeah, because even if Australia gets a carve-out, I had the pleasure of speaking with Adam Boyton, who's the head of Australian economics at ANZ today. It's, tariffs are bad because it slows global growth. So even if we've got an exemption for our goods, which of course is wanted, we want that to happen, but it's the bigger questions if you have an all-out trade war that really come to the fore. I think we've got the small caps, the small to medium caps names, and you can see there we've got a bit of a resources theme going on as well.
And to the downside, in the small end of town, Encounter Resource, again, it's all the mining stocks down today. All right, tonight.
Yeah, we've got the Governor of the Bank of England speaking, also a Monetary Policy Committee member there as well.
Earnings from Coca-Cola, Shopify, Supermicro, and FOMC Chair Powell also testifying before the US Senate. Yeah,
we also get a bit of Fed speak coming from Hammock, so we will be listening for anything in relation to tariffs, in relation to inflation, and whether or not this is complicating the outlook when it comes to interest rate cuts.
All right, tomorrow we've got lending indicators for December quarter and a really big day for earnings. Now, not only CBA, we've got AGL tomorrow, and we can see Suncorp Computershare Ordinate as well. And we, Nadine, are going to be speaking to CBA's Matt Common and AGL CFO Gary Brown. So some really big name interviews tomorrow that will bring you in the 3 p.m. show. Yeah,
and really looking forward to, going to the coalface, so to speak. When we take a look at what happened today, bit of a disappointment. Although, if I can say, we're not alone. We started to see Asian markets pull back. So we had Asian stocks snapping a 3-day rally. Lithium miners fell on that report that CATL has restarted its China refinery. And of course, so much pressure on the price of lithium as well. And just uncertainty with Trump raising the tariffs on aluminium and steel imports in that latest salvo in the trade war.
Yeah, the S&P ASX 200, I think it's just closed in positive territory, up by 1 point. We'll take that as a win. All right, we'll see you from 9:45 tomorrow.